Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Just want to thank everyone that came to the live stream yesterday. I thought it was very productive. I was able to get through a lot of details, so if you haven't watched the replay, make sure you do that. There were a number of things that I went in detail on that I think you'll find helpful. One of the things I mentioned on the live stream, which I did not get time to cover, is the MMT, which is the modern monetary theory. And I believe that this is going to play a very big part of us going forward, especially as we go into 2021, because I believe they're going to use these borrowing powers to actually boost the markets, because it's going to be a while before they're going to be able to get any serious tax revenues, no matter how much they change the taxes. So let's just take a look back at yesterday. We did see the markets trade up, almost printed an all-time new high. We backed off of there. Overnight, we're seeing more stimulus talk. Everything that happened yesterday was about stimulus for the most part, even though Chairman Powell was talking and the Fed's conference call. I'll go through some of the details on that here in a minute. It continues to be about stimulus. And I believe that most of this is priced in. We may see a new high. I've been talking about some numbers just above the 3,700 level, 3,721, 3,750 level. I'll go through all that in the technicals here in just a few minutes. As we look at what Paul said yesterday, it's almost exactly the same speech he made the previous time. A lot of government messaging about the vaccine and the COVID, all of those things. Once again, statements like we have lending powers, not spending powers, that they're not spending taxpayer money. They basically are telling you, we created the money out of thin air and we only have certain places we can spend. And then he set up the fairy godmother, Janet Yellen, his old colleague, and in fact, his old boss. And this is set up for her to come in as Treasury Secretary and do the spending side. And I've been talking about this for a while on this channel, is that Powell has been talking about the monetary and the fiscal. This is the team. So you have to have both sides to keep the economy moving forward. Now, the economy is upside down. We know that there's massive dislocation in hospitality and travel and anything that has to do with people getting close together, restaurants, you know the whole deal. But the bottom line is that the other side of the economy is doing very well. Housing is doing very well and is above the pre-COVID levels. How did that happen? Powell claimed yesterday that it's because of the low interest rates that housing is doing so well. Well, that's not even close to the truth. The reason why housing is doing so well is because of the mass exodus out of the big cities, moving to the suburbs. So there's a lot of building going on. And as we look at today, we're going to see more of that as housing starts coming out and building permits will be released. Both of those expected to be pretty robust numbers, but we are starting to see even those numbers falter. And I've been talking about this for a while on the channel, is that I believe that the economy is going to start to slow down. The part that's working is going to slow down. The other part's just broken. So there's not a lot of effects there. We'll also see more signs of that as we'll see claims come out tomorrow, expected to be around 825,000 increase. And the continuing claims came in at 5.75 million. Last week it was up a couple 100,000. I think we're going to see a continuing increase there. And if we do see a decrease, it's just because people are giving up. So there's nothing good that's likely to come out of those reports. Also, looking back at yesterday, we had retail sales miss, down 1.1%. Markets were under pressure a little bit. It seemed to matter early in the session. There was some selling coming in. This was just shrugged off. Why? Because of the stimulus. Everything's about stimulus. And overnight, we're seeing a bid in the futures. The reason for that is that the committee's working hard, and they worked late tonight. Wasn't that nice of them to work late for us tonight? to try to get some kind of stimulus package together, and they announced they're very close. So they're not going to want to do anything next week, so they'll probably come up with something, but I continue to believe that this is priced into the markets. I just don't see us blowing up. Now, all the algos are running the show. We know that. So if we get this positive news, we get stimulus, well, we're going to see the market get bid up. Also, as I talked about in the live stream yesterday, we have rebalancing the S&P. We have quadruple witching on Friday. We have Tesla being added to the index. All of this action is setting up for a crazy, frenzied Friday, maybe like we've never seen before. I've heard that just around the Tesla rebalancing, there could be $100 billion worth of assets exchanged. So it's going to get really interesting. As I said on the live stream yesterday, if it gets really crazy, I'll probably do a impromptu live stream. So make sure you hit that bell so you know if I actually come on, and so you can step in and we can talk about what's going on if the markets are really getting crazy on Friday. The other thing that I'm continuing to see, our database on a short-term basis is really grinding up here. We saw quite a few new sell signals again tonight. The bullish percentage downticked a little bit, but we're really seeing this rotation starting, which is telling us a lot about what's going on in the underlying markets. As we come into the end of the year, we're going to see this continuing slowing of the economy, the side that's working. Manufacturing reflected that yesterday. Just a lot of things in general are starting to show that things aren't very good at the moment. I don't expect that anything is going to get necessarily better. It's all going to be based on perception of what might be. And like I said, I'm going to do a big breakdown on what I think the MMT, or the modern monetary theory, will have in going forward. And I'll do something before I go on vacation. Remember, this video and Friday's video will be the end of the daily videos. There will be a video on Sunday night. I'm going to try to cover the MMT on that video. So look forward to that. And then the next set of videos that will be on a daily basis will in the first full week of January when we get back. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. As I go through the WaveTech database tonight, you'll notice there was about 500 sell signals, about 250 buy signals. So we basically had a slightly negative on one of the models and neutral on the other. We actually dropped from just above 69% bullish down to 68.9%. And we're starting to see some of that churning. And one of the things to watch for in the database as we watch this massive amount of 16,413 symbols in the database is when you stall at these levels, especially around the 68 to 62% level, you'll see a grinding, and this will actually set the tone for potentially a next leg up, or if it drops below 62%, it will suggest that there will be further liquidation in the database and therefore some downside in the markets. As you'll see here in a minute in the technicals, it does look like we're going to continue to grind into an all-time new high and move the markets forward. Average current duration of the symbols long, which are 11,308 of them, are right now 17.18. The average is 40, so we still have that roughly 22 days. The same thing on our primary index. It is long, and it normally holds about 50 days. It's currently long about 28 days, so there's about 22 days left on average. It can extend or it could shorten depending on what type of market environment we get. But I do expect, as I talked about in yesterday's live stream, that most of the time as we come into year end, I believe after this week, we could see a very docile market, maybe some volatility, but nothing extreme. We usually really quiet down the last 2 weeks of the year because everybody's working hard this week to get done to set up for the balance of the year. As we review the S&P 500 futures, what we're seeing here is the market just hovering just above the 10-period moving average. There is not a lot of momentum in this market, which continues to be a concern. We are seeing PPM 1s turning up just slightly. It's at at 0.13, ppm2 0.14, ppm3 0.19. So all of these are not in trend mode right now. Anything above 0.25 is trend mode. So I don't see this thing accelerating from here, but we are continuing to climb. Right now, the futures are trading 37.05 with the premium of where we traded yesterday. This would suggest the cash will challenge that 37.12 all-time high early in the session in the morning. So whether or not it will be able to hold, as I mentioned in my opening comments, everything's about stimulus. So will we have a stimulus deal? Will they hold it until Friday? Will there be a special session on Saturday? The drama will continue, right? So what we're seeing here is this grinding and this very lack of decision. Now, I also talked about in the opening comments that I believe that most of this is being priced in the markets. And with this low momentum, there's just a fair amount of risk here. We could reset this thing and scream out, but if we look at the market grid for today, the expectations would be for an R2 possibility. We are actually traded above R1 already tonight, 37.0425, the high 37.06.75, S1 36.83. On the downside, the low so far overnight's been 36.92. So we basically came in on the reopen slightly higher and have continued to trade higher. But this was reports that were coming out of this stimulus negotiations. As I said, they're very close. So this is what's at least driving the markets up a third of 1%. So we'll see how this plays out on Thursday and how we set up into Friday's close and whether or not we actually have a stimulus. The SPX, as I discussed in detail, we did get that SPX sell signal. Yesterday was slightly higher. We're up 6.55. So this is really a flat trade so far. We are looking to open, as I just mentioned, the futures are up about 11 plus handles. So we are going to be trading up at that 37.12 level. The high that we made back on December 9th was 37.12.39. So it's going to be interesting. These are always very interesting points to watch, because when you see that if we do get a new high, can it hold it? Can it follow through? Now, I've been talking about this 37.21 to 37.54 levels. Those are very valid targets above the markets, but the action around this point will be important, because we've seen a couple areas here, and we've seen this happen before, even around that first Pfizer COVID vaccine spike that we had back on November 9th. We traded all the way up to 36.45. It took the better part of about 2 weeks to get through that number again. So as we look at the PPMs here on the SPX on a daily basis, there's just no momentum here, and it doesn't look like they're turning up. In fact, the PPM2 is still fading. It should probably uptick if we get this higher close tomorrow, but I think there's still a lot of vulnerability in here. As we look at the 10-period moving average, it's 36.80, and as we look at the market grid for today, S2 is 36.82, so that would be a retest of that 10-period moving average. R1 37.09, R2 37.19, which would represent a move to an all-time new high. So this action today is going to be very critical to how Friday's going to set up with all the quadruple witching, the rebalancing, the Tesla situation. All of this is setting the tone, and I should be able to set this up pretty good as we come into Friday's markets. Next market I'll cover is the NASDAQ. The NASDAQ's climbing the wall of worry as well. That it just very low momentum. We do have a better profile, as I've been talking about. It has a bit stronger. We're at 0.20 on PPM1, 0.29 on PPM2, and 0.21 on PPM3. So we do have a stronger profile, and we're also seeing on PPM2, we're seeing it cross its first and second derivatives, and PPM1 has not done that, but we're going to continue to climb, and that key number, as I mentioned, in yesterday's video is 12,533, which is the 10-period moving average. That's going to be key. We didn't get anywhere close to that yesterday. We look at the grid for today. S1, 12,632. The low overnight so far is 12,672, just like with the S&P. We saw on the reopen a higher opening, and it's just traded up since. We're looking at R1, 12,708. So far, the high 12,715. So we're above R1. We're probably going to see at least an R2, which is 12,750 for today. So look for the ultimate range, S1, R2. We probably won't make a new low, but that is certainly possible because of some of the news we have coming out before the open in the morning. Next market I'll cover is the U.S. dollar. The dollar continues to decline. We're down 0.44 overnight. We're trading at 90. A pattern I do expect to see us set up an ultimate low here, but we could trade as low as 86. But this is an extreme. We're almost down to the RXT number. The S3 on the daily, the S3 level is 90.06, STX 89.94, the low 90 even. There is the potential for this thing to continue to go down. As I mentioned, not a political statement, but we went from America first to America last. The configuration that's going on in U.S. dollar is reflecting that the possibility of watching the dollar to decline, trying to price in some kind of trade advantage may be the strategy going forward, especially with Janet Yellen coming into the Treasury. It's going to be very interesting to see what type of effects this has as we go forward. And like I said, none of this is going to happen until February and beyond. So we're operating on the perception, not on the reality. The final market that I'll talk about tonight is gold. And in last night's video, I talked about going toward the 40-day moving average, 1869. Well, we've traded above that overnight because of the weakness in the dollar. We are seeing a move up to 1875. I mentioned the possibilities of going up to at least around 0.382, that's 1889, and ultimately going into a 50% retracement up at 1928. I do expect that we are setting up a major bottom here, and it's going to take several more weeks before we'll see this reflected on the intermediate charts. But also, once again, please refer to the live stream yesterday and the coverage of gold, as I went into a lot of detail, all going from daily, weekly, and monthly charts. So this will be the key in understanding what's likely to happen over the next couple of weeks as we come into year end. A quick mention on the weekly graph here. The key element here is going to be this 1878, or the 10-week moving average. What we're seeing here is that ppm1 is a minus 0.31, so tells us there's only about a 40% probability for the market to remain above that 1878 level. The high so far, 1875, so we're trading right into that range. So I do expect to see this thing back off of there, but there is a pattern that's unfolding on a weekly basis, and I'll cover this further as we come into Friday and also on Sunday's video, which will be the final video of the year. I'll cover what the expectations are, because we could end up setting up an outside reversal bar, which could be very positive even on the weekly basis. Last week's high was 1879.80. Right now, this week high is 1875. So if we get above that, we'll just call it 1880 level, and we close above the 1862 level, then expect to see that the market will continue to move higher and possibly higher into year end. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.